The euro currency continues to decline and may have some more downside in the days and weeks ahead. We've reached a pivotal point, the 111 level. We look at option positioning there. We see a lot of puts open at that 111 and 112 strikes, which means we've met expectations. But if the euro continues to weaken and continues to trade south of those levels, there is very little defense in the short term there, and that is going to exaggerate the move lower. So it'll see volatility bid. It will help to push the positioning factors lower, and the market will continue to decline despite all the other fundamental reasons why the euro should be declining. Options will actually help to exaggerate that move a little bit in the short term, that is. And if we look at as far as upside goes, there's very little call positioning, because even if the world is short the euro, there's very little risk or fear that we see a spike higher, at least over the short term, given the economic facts, given what's going on geopolitically and what's going on with Brexit, the uncertainty there. So a lot of reasons why the euro currency could continue lower, aided by option positioning. And if we look at what the ECB could be doing, they're going to look to add more stimulus, if you can believe that. They're going to probably do it in more chunky positioning than we have seen maybe from our Fed here, which is maybe looking to nickel and dime cuts here and there to kind of tweak the system. Mr. Draghi has said before his exit in October, he may look to be more aggressive, and that would be some kind of asset purchasing program, given they really don't have any more downside room to their rates. They do still have the ability to buy more assets, and that's likely what's going to happen. Again, aiding in the downside and weakening the currency. But right now, the ECB is more worried about the economics. When you look at what's happening in Germany and some of the economic factors there, they're trying to right the ship. And right now, that seems to be the only way. And if you throw all that aside and say, well, what else could there be? We still have Brexit to deal with. And Brexit right now, the line in the sand stands in October. There is still no deal between the UK and the EU, and right now that's going to continue to create uncertainty. Now, if the euro will outperform the pound, but how it does against other global currencies is yet to be seen. And if the Fed here remains a little less dovish than is previously expected, the dollar will be stronger. But again, it's going to be a hem and haw trade between the pound and the euro right now. So you could see the pound euro strengthen while the euro dollar weakens, given all the factors. And Brexit right now doesn't bring any clarity, but that date is looming and it has not changed as of yet. So right now, a lot of downside remains in the euro currency, with maybe a little bit of daylight against the pound, but otherwise it's going to be a watch and wait story, whether it's the ECB, the economic factors, or Brexit. There's a lot weighing on the euro as we speak, and I'm not sure what we can find here that'll give you any upside, but for right now, we'll wait and watch and continue to look at that 106 level to the downside. That's going to be the target level over the next, call it 1 to 2 months, if we break below 110.